Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
When you think of what's needed in phones, a lot of stuff, including semiconductors, which gets us to our next story. Elliott Investment Management investing more than $2.5 billion in Texas Instruments, pushing the chipmaker to improve free cash flow, setting the stage for another campaign by the influential activist investor. I should point out that shares of Texas Instruments were up about 3.5% earlier in the session. They're now down just a little bit, just a hair down 0.2%. So Lynn is sticking with us, but we want to add to the conversation our own Ian King, U.S. Semiconductor and Networking reporter here at Bloomberg News. He's out there in San Francisco. TI, Texas Instruments, activist investor pushing for some change. Talk to us about the significance of this move and what might happen to TI as a result.
So this is a little bit of a head scratcher, if I'm honest.
Fair.
They normally go after management teams that are seen as being sleepy or a little bit unaware. TI has been explicit about what it's going to do, its spending plans, and how it's going to deploy cash. What Elliott is doing, which is a little bit unusual, is actually challenging a semiconductor company's view of the semiconductor market. So this is a bit of an unusual move for them, and I have to say this is not a management team that really a lot of investors or analysts for that matter dislike. They're widely viewed as being pretty competent.
Ian, take a step back here and remind everybody, Texas Instruments, a storied company with a huge past that makes semiconductors that go into pretty much everything. I was looking at their customers on the SPLC function, the supply chain function on the Bloomberg terminal. Everybody's their customer. Remind us what TI's specialty is.
Yeah, it's an analog and an embedded chip. So basically, we're not talking about the most advanced in terms of process technology, but we are talking about things like a chip that goes behind the button when you press it to switch the power on and off, something that moderates power inside a device. So they are pretty much everywhere. And their pitch is that, like, look, over time, everything becomes more and more technology enabled. Everything gets electronic functions. So our chips have a bigger and bigger role into that. And that's been the case, but we're going through one of the cycles that the chip industry goes through that we've talked about, and that's where they are right now. So it's not like they don't have cash, but they are prioritizing spending on manufacturing and bringing their manufacturing back into this country.
Wait, go figure, Ian. They're actually running their business and, thinking about the future and what they need to do. Lynn, come on in on this conversation in terms of TI and what they are doing and kind of what happens next year.
Yeah,
maybe.
I'll just build on what Ian was saying. He was referencing this broader, very ambitious plan that Texas Instruments has to basically overhaul its business.
Yeah.
It's going to bring all manufacturing back in-house and have virtually no contractors to help make its chips forward. That is a bet on short-term pain for long-term gain, and that's what they've been saying for in recent months. Ian and I were exchanging messages this morning about it, thinking they have been telegraphing this squeeze on free cash flow for quite some time now. So it is a little puzzling that Elliott is coming into it and starting to raise concerns after the executive management team has been spending a lot of time proactively laying out these concerns themselves and saying, but don't worry, at the end of the day, free cash flow per share is still our main focus. It's just longer term and not short term. The last point that Ian made about how we're in this AI cycle, to be sure, it's not NVIDIA, right? It's not Micron. Yeah. It's not one of the big AI super semiconductor stocks. And, that they don't have that going for it. So,
but it's chips that go in,
everything.
Go into everything. I'm thinking Monday, and everything has an on and off switch here. I don't know. So that's what I find interesting, Ian. It's not like, surprise, we're doing this, right? They've laid it out. So I don't know. What's next? Are there other investors that are going to be knock it off? I don't know. How do you see this playing out?
I mean, there is a theme here which obviously Elliott is tapping into, which is this is a company which over the last few years aside from its strategy for which markets it's in, has been really heavily focused on investor returns. It has, I think, the second highest dividend yield of any chip company out there, and it's spent a lot on buybacks. So what's happening here is that pool of cash for buybacks is going away in the short term. Very, very clear. So that's an investor class that's perhaps going to be slightly alienated. But this is literally the first that we've heard about any long-term real kind of unhappiness with it. And the stock, of course, it's lagged the rally that Lynn just alluded to, but it's still up.
Ian, you cover chips, you don't cover activism. And I'm wondering if this is something that happens in your world quite a bit, or if it's pretty rare to see an activist take a stake in a company like this.
No, it has happened. I mean, you remember what happened with Qualcomm and when they were trying to fend off the Broadcom takeover and what they were going to do. And in general, TI has actually led one trend in the chip industry, which is to give dividends, to pay, to use that cash more and more, less for R&D and more for investor payouts, and that's become a thing over the last decade that chip companies never did, but they really do now, and they have to do. And TI has been a leader in that, if anything.
All right. So what do we watch out for, Lynn? Kind of what's next here?
Yeah. I think the big question
story
is whether Elliott will go after board seats.
Okay.
I think, there are two paths that this could take. One, they could sit there and negotiate some kind of change in capital plan with TI specifically and hammer out agreement there. Or they can make a more aggressive play for some board representation and force change.
Well, Ian, would that be a mistake if they kind of push back and TI has to kind of rethink its plans or do something different because of this activist investor? Is that a bad thing in your view?
Well, do you believe Elliott Management's view of the semiconductor industry or Texas Instruments Management's view of the semiconductor industry? What's underpinning what TI is doing is what's happening in China, where there's a lot of production coming online of this type of chip. What TI is saying, hey, we can do this ourselves, we can shift to a new level of technology for this so that even when all of these Chinese factories come online, we'll be in a very strong position. That's the future bet that they're making. Whether Elliott understands that or whether they've decided to ignore that is another matter, and I guess we'll see how that plays out when they have to argue their cases in front of other shareholders to see if they can gain momentum.
Yeah, these aren't the chips, Lynn, that are protected by the U.S. government when we put on controls and stuff. These aren't protected,
right? And that's the other shoe to drop here. It's been widely expected that Texas Instruments will be among the companies in America that benefits from the CHIPS Act and gets some funding. Whether Elliott has baked that kind of subsidy into their strategy that they're pushing with the company is unclear.
I feel like it's a scratch your head kind of Tuesday. Can I just put that out there? I think you said it really well. It's like, I don't know. People just woke up, had a long weekend, and we're like, we got to do something.
Got to go after TI today.
It's a little wacky.
Buy some U.S. Cellular, put a couple $1 billion plus some into TI.
What's wrong with people?
It's a long weekend.
Just go and make some more burgers and hot dogs and just extend that weekend. Listen, to both of you, we really appreciate it. We covered a lot of ground and so appreciate it. Ian King, U.S. Semiconductor Networking reporter at Bloomberg News, right there in our San Francisco bureau. And Lynn Doan, thank you as well, managing editor of technology and global cybersecurity at Bloomberg News, here in studio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Bloomberg's Will Wade, who follows climate change for us and more, really kind of just what's going on in the energy space, alt energy space in particular, recently wrote, the battle to rein in climate change has become more urgent, and people are realizing that carbon-free nuclear power will play an important part. A 2023 Pew Research Center survey found that 57% of Americans said they support the use of more nuclear power. That's up from 43% in 2020. Young activists, including last year's Miss America, are flooding TikTok and Instagram with quirky videos extolling the virtues of fission. It's a sharp shift, needless to say, from the anti-nuke protesters marching in the streets in decades past. It's definitely a different tone, it feels like.
Yeah, it certainly does. Well, here with an update on the industry and back with us is Maria Korsnick, President and CEO of the Nuclear Energy Institute. She joins us from Washington at D.C. Maria, good to see you again. How do you explain the shift in what we've seen in recent years that Carol just mentioned? In past decades, people marching to stop nuclear power plants from being built, to now people extolling the value of fission.
Yes, well, hi, and it's great to be with you again. The landscape is really changing for nuclear. It's a confluence of events. There's energy security concerns. There's climate security concerns. There's the need for clean energy jobs. We have bipartisan support. And sort of all these events are coming together to really put nuclear in a great new light.
Well, speaking of that, Southern Company added 2 more reactors to its Vogtle power plant, Unit 3 and Unit 4. It's now the biggest nuke plant in the United States. The project, though, finished 7 years behind schedule and about $15 billion over budget. So how do you quantify that or qualify that? A success story or a failure?
So I call it a success story, but I'm not hiding from some of the items that you brought up. But they built 2 units, Unit 3 and Unit 4, because they already had 2 units on that property. So I think the success story is that you look at Unit 3 and Unit 4, and how long did it take some things to happen on 3, because that was the first of a kind, and then how much better did it get on Unit 4? For example, the testing was completed in half the time on Unit 4 than Unit 3. Another one was 35% faster from, let's call it the initial start to when it was actually generating and connected to the grid. So just like any sort of new startup company, you start to work down and get more efficient and cost less. So these are 2 examples. What do we think that next data point will be? And what do we think that next data point would be? There was excellent learning from units 3 to 4, and it puts us in great position to build more.
I think some person might listening right now say, wait a second, this is not a startup because nuclear power plants have been in operation in the United States and been built in the United States for decades. Shouldn't we know by now how to bring them in within a timeline and within a budget?
Yeah, you're absolutely right. We have a wonderful operating fleet that we have today, 94 reactors now. But when I say startup, it's because this particular type of reactor had not yet been built. This is an advanced reactor, has a lot more passive features than what had been in the previous designs. And so, like anything, you can say, well, we all drive cars. Well, we do, but that doesn't mean all the cars are the same. And so it's the same way with nuclear. Absolutely, we know how these operate, but this particular model hadn't been constructed. And yet, will be more built in the future. There's already more that the people are interested in building. And so we look forward to see how much even more efficient that we can get. If we had continued to build nuclear, we would be better and more efficient at it. Like anything else you do. You don't do it for a while, you're not as efficient.
If nuclear was the answer to so much, Maria, wouldn't we see it much more around, if you will? Wouldn't it be kind of more ubiquitous than it really is?
Well, it's 20% of our energy grid today. And so I would say in a lot of cases, it sort of is everywhere. And I think as you look ahead to the future, my gosh, demand, demand, demand. I think we're all hearing it about how much clean energy is needed, whether it's for AI or machine learning or just reshoring the manufacturing sector, which we're all very interested to do. The demand on the grid is really increasing. Well, and for that, you're going to need reliable, resilient, 24/7 power. That's what nuclear is good at. It's clean, it's there when you need it, and it's very reliable. And we've proven that year in and year out.
You know where I'm going to go here. I mean, the worry about concerns, I think while more Americans seem to be behind it, if you said, okay, we're going to put the nuclear facility or nuclear plant in your backyard, they'd say, maybe not so much. So why should we believe it will be safe? And the waste is still an issue in terms of, what you do with it, the disposal of it.
So let's talk about that, because out in Wyoming, they're talking about building a new plant, and there were 4 different communities that fought to have the nuclear plant in their backyard. And so I think the narrative is very much changing. I think people are taking a hard look at what it's really going to take to power our grid with clean energy, and they realize that nuclear is in fact a very good option. And so I think the conversation is really, very much changing around nuclear in a very positive way. If you look at the states, for example, there's been over 200 bills in support of bringing nuclear to the states. That was nothing that we saw a decade ago, even 5 or 6 years ago. We're getting bipartisan support here at the federal level. And it's not just in the United States. Canada wants nuclear. Countries across Europe are interested in nuclear. I was just in Ghana a few months ago. Ghana wants nuclear. So it's really not just a US thing. It's really a worldwide thing. I was at the COP meeting, COP28.
Yeah, we spoke to you. We spoke to you just after that. I remember that just a few months ago.
That's
Maria,
exactly right.
Everybody wants nuclear. Nobody wants nuclear waste. You literally cannot sell this stuff to anyone. Where do we put it? What's the answer?
So the answer to that is, why don't we call it future nuclear fuel? In fact, it's not just something that can't be used again. And so you have a lot of those conversations happening today about potentially recycling. And at the end of the day, the fuel is very safely stored where it's at. Finland, in fact, which I head to next week, just opened their deep geologic repository. And like that, we will find one of those here in the United States. In the meantime, we'll collect it in fewer places. Right now, it's stored at whatever plant that it was used at, and we can consolidate that fuel as we're looking for the long-term fuel storage answer. And what, at the end of the day, it's not nearly the high volume that many people think.
Safe to say, though, there are concerns. I mean, Germany, they just switched off their last 3 nuclear power stations last year. There are concerns that you see movement forward, movement backward, because there are legitimate concerns. We just got about 30 seconds left here.
Yeah, and Germany is one of the few places, and honestly, I think that we'll see Germany live to regret that. Japan is restarting their plans. Almost every country in Europe that has nuclear today is extending those plans and looking to build new. Again, it's really a worldwide consensus that more nuclear is needed in our future.
All right, going to leave it there. Hey, listen, thanks. We always appreciate some time with you. Maria Korsnick, President and CEO of the Nuclear Energy Institute, joining us.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, it plays a critical role in New York's food system, and yet it's got some pretty serious problems. We're talking about the Hunts Point Produce Market, which is a combination rail yard, truck depot, trading floor that quietly supplies about 60% of the city's fresh groceries, $2 billion worth of fruit and vegetables each year. Organized as a cooperative, the market offers an entry point for both suppliers and buyers who would otherwise struggle to compete with national chains and distributors such as Sysco, Walmart, and Whole Foods. It also keeps the many neighborhoods the big chains ignore from becoming food deserts. So it sounds pretty terrific, right? There is a hitch. Turns out it's also a major polluter. This Bloomberg Businessweek story will be featured in the forthcoming issue of Bloomberg Businessweek magazine. You can read it now on the Bloomberg and at Bloomberg.com/Businessweek. With more, Bloomberg News CityLab reporter Fola Akinnibi, just joining us here in studio. Fola Akinnibi. Fola, first of all, for those not from New York City, lay out what Hunts Point Produce Market is all about.
Thanks, Carol. It's a huge part of the city's food system. What's unique about the city's food system, I guess when you compare it to other American cities, is that we have this huge ecosystem of small grocers and ethnic grocery stores and just fruit stands and so all these stores that you could just pop into when you're sort of walking around the city, they're all supplied by the Hunts Point Market, and so it like you said, supplies 60% of the city's fresh produce.
I went to school uptown in New York City, and everywhere, like 116th Street, 110th Street, like that was such a part of it, and that's such a big part of the city's fabric, I feel like. Take us to, you went and you visited, and talk about some of the main hours where you're seeing so much activity at the market.
So the interesting part about the market is the way we shop grocery stores, during the day or after work.
Normal hours.
Yeah, normal hours, right? Grocery stores in these chains, they shop the market after hours. So between 10 p.m. and around 3, 4, or 5 a.m. They're there shopping for their product for the next day because in a lot of ways, the Hunts Point market serves as sort of the warehouse space for these tiny groceries. Like in New York, we all have, we're all looking for more space, more real estate, and these grocery stores just don't have it. And so the market sort of serves as their warehouses. So anyway, when you go at night, it's sort of this bustling kind of trading floor, right? You see people with cash in hand, sort of buying pallets of fruit, buying pallets of vegetables. You see like the hand carts.
Feels so old fashioned.
Yeah, it's pretty old fashioned. Yeah.
Yeah. So they're negotiating back and forth.
Filling up trucks with boxes, and they're sort of it's a buzzing place. And it's crazy because during the day it's a little quiet. It just looks like a truck yard.
And if you've ever driven past it, that's exactly what it looks like. 113 acres, as you said, busiest 10 p.m. to 3 a.m. The problem is it's been around for a long time, right? And it's getting old and outdated. It's been old and outdated. Tell us a little bit about what's old about it, what's outdated about it.
So the market moved up to Hunts Point in 1967, and they haven't updated the facilities since. And so, like much of American infrastructure, it's sort of crumbling, right? And so the physical plant is old. They have old refrigerators. The electrical grid is tapped out. And so as a result, there's not enough space to store all the fruit safely. And so what they do is there are hundreds of diesel trucks just running 24/7 to store the rest of the fruit, to keep it cold, to keep it fresh for folks like us to consume the next morning. And so
great for us, not great for the people who live in around there.
Not great at all. Hunts Point has some of the highest rates of childhood asthma in the city and in the U.S. as a result.
How long have they known about this, that this has been a problem? For a while.
It's been a problem for the better part of 20, 30 years.
Why hasn't it been dealt with?
It's expensive, right? They're looking to the market is looking to raise $650 million to do renovations, to upgrade the refrigerator space, to upgrade the grid, to get those trucks offline, right? The trucks that are running constantly, and to sort of modernize the market. And so far, the city, the state government, and the federal government have chipped in a couple $100 million. But in order to start work, they need the rest of the money. They need about another $300 million to get started.
Easy peasy. So where does that money supposed to come from?
They're hoping it comes from the city. The rest comes from the city government. I mean, that's the hope. But I mean, they've been trying for the past 2 years, and it hasn't happened yet. But as we said, it's a vital part of the food system.
Well, it's so, as you say, vital part of the food system. So those folks who are using it, what are they doing? Because they've got to make sure that the produce that they're buying, or that they're transporting, that it's kept safe. Are they having to pay for some of the upgrades, or doing whatever they need to do to make sure it works for them?
Yeah. So there are 27 vendors at the market, and most of them are family businesses, right? This is not an easy business to get into, right? You pass down the knowledge, you're dealing with perishable items, and it's sort of it's a specialized trade. And so for some of the larger venues at the market, they're able to afford upgrades, right? Like I went to one of I went to Katzman Produce, and in their warehouses, their warehouses are fully refrigerated, fully they have the latest technology. If it gets too cold in their room with apples, then an alarm starts beeping, right? And so they're fine for the most part, but for some of the smaller vendors and some of the vendors that don't have those resources, they can't afford to take on that expense, or to front that expense on their own, and so they're sort of stuck waiting for help and waiting for the city to chip in.
Tell me if I've got this right, because I thought I got from your story that it needs to be fully funded for them to start making any major changes, to break ground, essentially.
Yeah, for these city construction projects, you need all the money in hand before you could start. And so if they started now, then the vendors would have to kick in the remaining $300 million, and that's just not feasible. How
is it that, something that is so vital to the city, that it's not, as you said, it's been around for several decades, some of these issues, some of these problems. What did you get from city government as you talk to people to find out kind of accountability, if you will, and why this hasn't been fixed already? What did you come up with?
I think it's sort of again, like a lot of infrastructure and a lot of things like that, it's just sort of back of mind. People aren't really thinking about it. It's hard to sell, right? Like it's hard to explain what it is. People go to a grocery store and they pick up their food. They don't really think about where it came from or how it got there.
Well, that, I started with you kind of taking us there because I feel like it's one of these things that, as you say, we just pick up our produce and we just assume it's going to be there. Everything's going to be fine. The supply chain's going to be fine. We learned during the pandemic, supply chains aren't so fine. And they actually kept running, correct, during the pandemic?
Yeah. So the market didn't close for one day during the pandemic. And in fact, the CEO there was in constant contact with the city government, giving updates about what's coming in, what isn't coming in. And so there's this window and there's this connection to city government in this area. It's important for the government to know where the food is and that the food supply is safe.
Who owns it all? And tell us about the CEO a little bit. This is Mr. Grant, correct?
Yes, Philip Grant is the CEO, and so the market is structured as a co-op, and so the vendors own the market. In the past, so when I first got to Hunts Point in 1967, the city was running it, but after the financial crisis in the 70s, the city didn't really have the wherewithal to handle the operations of the market, and so the vendors took it over, and so the vendors own and operate the market, and it runs as a co-op.
Well, it's interesting too, and you think about the vendors' ownership. One would assume, right, that they've got to be kind of have a financial stake in this, and certainly financial stake to improve it as well. This is one of those things. Again, like if you're in New York City, you just assume it's going to be there. It's been around for such a long time. It's kind of an institution, if you will. I always think about the seafood market that used to be, down at the seaport. Again, just so vital in terms of the food supply and supply chain. As you covered this and reported this out, what were some of the things that just struck you in telling the story?
I mean, I think that this is sort of one of the last markets like this in the U.S. It's definitely the biggest one, but in other cities, you're sort of relying on Walmart or Costco or a large grocery chain, and so the difference between those chains and Hunts Point is that what they do is they contract with huge farms, and they run their trucks from the huge farms to the distribution center for the Walmart distribution center to the store, right?
Right. They're just direct from the farmer.
Direct from the farmer, and so this difference is that Hunts Point is sourcing from all over the world, and they're sourcing at a level where they can keep things affordable for these small grocers, and they can keep these small grocers competitive with like these larger chains.
Fola, what's next? Because the problem's been there for a while, and it sounds like there needs to be some major investment. What's next in terms of what are you going to be watching to find out kind of what's the next step for here?
So if we're watching to see if they can get the rest of this money secured, they're looking to start construction as soon as possible because their lease is up in 2031 and also. Their lease is up in 2031, so they need to start work immediately. And also some of these grants.
2031.
Yeah, and some of these grants expire.
What if they don't get the money? Then what? Who knows?
Yeah, who knows? They're gonna have some serious issues.
It's hard to imagine it wouldn't be there.
Yeah.
One thing I did want to ask you though, and I realized, is that in terms of other cities, do they also have major farm markets? So there are a few cities that have markets, and they're historically. Pretty much every major American city had one of these, right? And over the years they started to become obsolete, and as these grocery chains got larger and larger, and these grocery suppliers got larger and larger, there was less of a need. But I mean, just to come back to New York having this robust ecosystem of small grocery stores, and that's just not the case in a lot of these other cities. I spoke to folks in Phoenix who were looking at sort of reviving their market. Interesting.
Their market folded in the 80s, and now they only have 2 produce suppliers in the whole in what is a large city, right? A growing city,
right?
And so they're looking to revitalize it because there are food deserts in the southern part of the city, and they're looking at ways to supply smaller grocery stores and supply smaller.
It's such an important story, and I feel like we've talked about food deserts a lot, and that unless you kind of broaden it out, you have to succumb to just a few big suppliers, if not one big supplier in a certain area. So it's an important part. Very important to, I feel like, the fabric and the health of our city, no doubt about it. Fola, thank you. I really appreciate it. Fola Akinnibi, he is Bloomberg News CityLab reporter, joining us here in studio. As we mentioned, this story, Bloomberg Businessweek story, will be featured in the forthcoming issue of Bloomberg Businessweek magazine, but you can read it now on the Bloomberg and also at bloomberg.com/businessweek, so be sure to check it out.
I'm driving in my car, I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, 18 minutes left in today's trading session on this Tuesday trade. As I try to remember that we did have that long holiday week, it felt like, I don't know about you, but I felt like I was gone for a week.
It was
Maybe
really
that's why
nice.
I'm
It was
like-
really nice.
It
It was nice to have 3 days off.
You know, suggestion box, maybe we do these 3-day
Hey,
weekends
you know
more
what?
often.
Some people say,
What?
Bernie Sanders, for example,
Yes.
that if we continue it like this, we'll see a 4-day work week at some point.
Yeah, I'll call the exchanges. Hey,
I've-
how are you with that
listen,
4-day trading
I've
day?
spoken to some very
Traders?
powerful people
Yes.
who said that they think,
Who will remain nameless.
who will remain nameless, who said they think we'll see a 4-day work week in our lifetimes.
But not if you're tied to
Who
the
work in this,
financial
people who work in this building who come in 5 days a week.
to the financial markets.
That's the thing. If we tie
right.
it to the
Yeah.
financial markets, then I don't know if that's going to be a thing.
Let's see what Ana has to say.
Yeah.
Let's get to it. We actually want to talk a little bit about private credit because we see a bunch of headlines. Pigeon Private Capital, they're a division of Prudential Financial's asset management business. They established a European long-term investment fund. Private credit's historic rise. We've talked about this a lot here at Bloomberg, creating a problem that most asset managers would love to have, and that's too much cash in their coffers. You got to put it to work. But, you got to figure it through. So let's get to it with Ana Arsov. She is Global Head of Private Credit and Financial Institutions at Moody's Investor Service. Ana, great to have you back here with Tim and myself. So private credit, everybody wants a piece of it increasingly. What's top of mind for you guys and what you are tracking specifically at Moody's in a space where we sometimes say it's a little fuzzy?
Thank you for having me again. Always pleasure to have this discussion with you. Listen, it's a it still remains hot topic. I think it's our third interview in private credit, and every time we have this discussion, it's hotter and hotter. And that's actually being a credit analyst and coming from the credit rank. That's what worries us. And let me just kind of dissect that. As you said, everybody wants a piece of this action, meaning either to invest in the business or build a business. And when the business is relatively mature, and particularly now with the opening of the leverage finance market, and I'm talking about direct lending specifically, we are worried that credit terms will suffer, and eventually there will be deals who are done, maybe less prudentially when there was less competition, particularly between the public and the private markets in leverage lending. So we are concerned, and we're seeing actually credit terms deterioration. We are seeing competition for talent. As well, and at the same time, a lot of dry powder being raised that has to be deployed, and maybe deployed at terms that are going to be less favorable for creditors in the near term and medium term.
All right, so bummer for the creditors, right? The folks who need to borrow the money. But having said that, as we kicked it off with Ana, the idea that so many people want to be a part of it, doesn't that, I'm playing devil's advocate a little bit, but doesn't that kind of spread around the risk in the private credit market so that there's not just, one entity, one lending entity, if you will, that's kind of stuck holding the bag if things go wrong? And investor exposure, same thing.
That is diversification. It's always good of risks. The issue is that, and our statistics have shown that the biggest fundraising actually is going now increasingly to the largest players. So therefore, this is becoming a more concentrated market. I'm sorry for that. This has been a more concentrated market, both on the private equity side, but particularly on private credit. Fundraising is indeed going to the largest and more established players. So with that being said, diversification is very interesting because it is the same pension funds and insurance company who are investing on the private equity side, and also or sovereign funds are also investing in the private credit side. So they're all increasing their exposure. The good thing is here it is from a systemic risk perspective, these are different funds with different investment and underlying. So there's no that big concentration of one type of a risk, let's call it, subprime mortgage, US subprime mortgage, or US office, commercial real estate in one type of a fund. It's diversified to many real money investors that have a long-term perspective and long-term investment horizon, and also without necessarily immediate liquidity call or risk. So that's the good about this market. You're absolutely right. diversification of the investment community, and also not imminent liquidity draw that these kind of investors are coming in with.
When I'm wondering, are you going to come on our show and say that private credit is not hot? When does that happen?
You know what, so if you think about where we are and what inning, a lot of us have been talking about private credit as equivalent to direct lending. And direct lending is just another middle market now expanding to larger middle market leverage finance business. But private credit is beyond that. There's a lot of talk about potentially the ABS private credit market, which, if you listen to various pundits, anywhere between 10 and 40 trillion, any kind of asset from any bank that potentially can be sold. Is that aircraft receivables? Is that potentially data centers? Or as plain as even commercial real estate that potentially can be packaged in a private securitizations that will have basically be deployed into the kind of the investment community, same insurance companies, pension funds, sovereign funds. So therefore, if you take a broader picture of private credit, of any credit provision that's not done by the banks but financing our economy, that means that this is going to be here to stay for quite a long time.
So, all right. Moody's, we know who you are. And you guys look at these things and try to assess risk. So where's the risk in the private credit market today?
So the risks are really, again, they are mostly housed, again, within institutional investors that are sophisticated investors and the sub-funds. And again, pension funds have the largest part of this, then insurance companies, then sovereign funds. The growth into retail funds is what we have been raising as a particular concern. If you look at where the new BDC formation and business development companies, for benefit of your viewers here,
right,
is that there is the largest funds that have been grown is with retail or high net worth money. And the question there is, this type of funds have a different kind of liquidity calls, if you will, ability for retail investors to basically call their money on a quarterly basis.
Right.
And that's where the biggest growth has been. So one can say, you can be devil's advocate, well, shouldn't retail and high net worth individual also benefit from the growth of private markets? And the answer to that is, of course. But the second was, is this done in the prudential way, sufficiently with the right disclosure, so afterwards they really know what they're getting and they cannot get their money overnight.
It's so funny that you say this. I was just having a discussion with someone in preparation for a panel, and this whole idea of even accredited investors, do they understand liquid versus illiquid, right? Because private credit, not as liquid as certainly kind of your bread and butter investments. And so do they understand going into one of them or going into a private credit fund that if they need the money or want the money, it's not so easy to pull out, correct?
Exactly. So typically how these funds are orchestrated.
And just got about 30 seconds. Yeah.
Yes, you can have a quarterly, small portion of liquidity. These funds that have established are big in this space, have a provision of bank clients to provide for that and more liquid assets. But not the point being is that investors need to really be aware that this is an illiquid assets and they're locked for some period of time and they cannot take their money back. And growth in that area can create disclosure risk, regulatory risk. That's what the funds should watch for.
Yeah, it's just, certainly a topic that fascinates us in a big way. Put a private credit story on the most, on the Bloomberg, and it tends to be among the most read.
$1 million a year salary for some of those folks who left the firm.
Ana Arsov, Global Head of Private Credit Financial Institutions at Moody's Investor Service. Always fun to check in with you. Really appreciate it.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.